Hey everybody, it's Mike with the Subscriber Webcast for Wednesday night, October the 8th, 2014. Okay, daily chart of the mini. We went down and we made matching lows down at 1918. Rode the short down very nicely. Got out. And I'm going to walk through. The pop off the open that we shorted, then the bear bias, the reversal to the bullish bias, because I think that's important. That doesn't happen very often. And it really was indicative of the power that was to come above 34.5. So, you know, we had a very nice morning. And for me personally, the two problems with my day was this. I didn't hold the 2075 long as much as I should. I didn't believe in it. I really didn't think we were going to do as much as we did. Number two, I didn't respect the bullish reversal enough to go ahead and get long the 34s and ride it. I just didn't think we were going to do that much. But we did, and that's what happens. Let's talk about risk markers. So I walked through and I spent the entire afternoon, because I know there's people that sit in silence that will get short and they'll get short and they'll stay up, they'll stay short, and they don't have the account, they don't have the experience, they don't have the you name it to be sitting in a short for any period of time. But they do it anyway. Happens every time. So we walked through a 34.5 risk marker on the day short from 30 to 31. And there were a number of issues at 34.5. We had a fib level there. We had Jack was getting sell signals that were just getting run over. We had the reversal level there, which we'll talk about. So there was a lot of confluence at 34.5. And so that's the risk marker. Over 34.5, it's wrong, you need to get out. And, we did another going on 30 handles from the risk marker. So you have to control your risk. You have to. And I'm going to say something here that's going to be very difficult for some of you to hear, but you new people need to hear it. The old people, I know they didn't do anything. But if you're a newbie trader, you should not be doing anything that looks like a hold in this market. If you have one account, if you have a small account, because that's how you get into serious messes. When I shorted there, I was very upfront that I didn't want to stop, and I'm going to explain to you why in a minute. But for you guys, there was a 34.50 risk marker on it, because I was very concerned if we made a bullish reversal that you needed to get out of the way. And that's exactly what happened. Don't ignore risk markers. I don't know if anybody did. But if you did, don't ignore them. They're there for a reason. Be concerned with what the risk is on your account. Understand that I'm giving you a risk marker for a reason, and pay attention to it. Don't do what I really hope nobody did, and that's just stay short because I did. Because me being short has nothing to do with any of you being short. I will take swing trades into the abyss. I've done it before and I'll do it again. I'm not going to do it on this one, and we'll get into that too. But if I give you a risk marker, you need to follow it. So if I give 20 or 25 back on this trade, that pales in comparison to what I've pulled in on swing shorts this year. Hundreds of handles. I mean, you guys have all been here for it. So if this one doesn't work out, hey, they're not all going to work out. I get them wrong. But I know my risk and I know my size. I have a plan. If the plan doesn't work, we get out. So here's the plan. That's a very big green candle, and I appreciate that. You have two gigantic levels that need to be tested. And unless those two levels are broken above and closed above, we will continue to be in a sell rallies market. We will go back to 18, and we will break 18, and we will go lower. The ES has to demonstrate that it wants to trade above the middle band. It has yet to do that. Maybe tomorrow is the day that it does. And if it does, I'll buy dips and I'll make money on the long side. But the bulls have to show me something. And, well, what about today? Well, today was a big up day. We've had big up days before. This was a big up day. This was a big up day. This was a big up day. And the beginning of this day was a big up day too. But what's universal about these two occurrences is that they failed at key areas of resistance. Now, losing the weekly pivot was not in the bears' plan, and they gave it up. They tried to get it back. That was the pivotal point of the day. They tried to get 52 back. They traded as low as 49, and then it was just a rinse and repeat on a trend day, and they lost it. So if the bears are going to prevail at all, they have to do two things. They have to hold the 50, which is the red line, and they have to hold the 20, which is the green line. If they can do that, then we'll turn back down and we'll just keep making lower highs and lower lows. If they can't, if we pull back to 52 and it holds again, then that's going to create a floor. If we start creating floors, that's going to create a springboard to get up to highs above the middle band. If we close above the middle band, then I become a believer. Okay? But I'm not going to become a believer yet. Because right now, it's the whole Charlie Brown and the football. And Lucy's got the ball, and it's teed up, and here comes Charlie Brown, and Lucy pulled the ball back here, and Charlie Brown fell on his butt. She pulled the ball back here, and Charlie Brown fell on his butt, and she pulled it back here big time, and he fell on his butt. So, it's all teed up, he's running, and is she going to pull the ball back or not? We'll see. But I'm going to wait to see if she pulls the ball back or not. And if she pulls the ball back, I'm going to double down. If she doesn't, then I'm going to get out and get long. So, I appreciate what happened today, but I'm not completely sold on some kind of a V. I mean, we talked about it. Look, we talked about a V here. It didn't happen. We talked about a V here. It didn't happen. So you're not going to get me in the V camp after 2 or 3 hours of up stuff because it's just short covering. You need buying. You need actual buying. You need a dip tomorrow that gets bought and taken to new highs. And then you need to take out the middle band and close above it. Do that stuff, and we can start talking about actual Vs that can run. And if we do make a V, that's great. That's another 50 handles from here. So there's plenty of handles to be made on the upside if we're going to go do that. But for now, I'll take a wait and see approach to see if that party can actually get started. So if you're flat, you want to look for a failure in the 70, the 60, where are we here? You want to look for a failure anywhere between 68 to 71. And if we fail there, you can go ahead and short that with a stop above, and you're looking for a retracement.